Hi everyone, this is Jason Bierk of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a first-time guest. I've been trying to get him on for a while. It's Bitcoin expert Tuur Demeester from Belgium. So thank you for joining us here today, Tuur.
Hey Jason, good to be here.
Great. Now, Tuur, you're in Europe. I'm sure you're noticing the stuff that's going on with the negative interest rates. Where do you think Bitcoin fits into this negative interest rate thing? We had this Keynesian experiment of negative interest rates. We had what happened in Cyprus a year or so ago, and that was one of the major catalysts for spiking Bitcoin. Do you think this is going to be a big spike for Bitcoin with this negative interest rates?
Yeah, I think it's going to be part of it. In the U.S., we have the FATCA law that's being launched, which is detrimental for people having offshore bank accounts. And then in Europe, we have this negative interest rate, funny policy. It all plays into Bitcoin as a safe haven. And I think that's generally still quite underestimated. People don't really understand gold, and in the same sense, they don't really understand Bitcoin's scarcity and functionality as a global liquid safe haven currency. So yeah, absolutely. Also, something I've been pointing out since 2011 is that the bail-in train is coming. In 2008, we had bailouts. The banks were saved money from the outside, and central banks know that the only thing they really have is fiat money, and if they print it into oblivion, then we're just going to have hyperinflation, and their power is going to go away. So they want to switch gears, and they want actually banks to go bankrupt so that the money is at least worth something instead of keeping them bailed out. And so we had the Financial Stability Board in 2011 making this global framework for bail-ins. We have tests now with Cyprus. That was a test phase to figure out how the public reacts. And the next phase is just waiting for the next crisis to hit. And specifically in Europe, for example, we have this Bank Recovery and Resolution Directive, which will come into force next year. And in that directive, it is stated that if you are a bank and you're in trouble and you want a bailout, you want money from the government, then you're only going to get it after you've applied a haircut on 8% of your total liabilities. And that means people's savings are going to be cut down. They're going to lose savings, and of course that's going to cause panic for sure. I have no doubt, and that's going to make a lot of money that's now sitting idle flow into liquid assets with low third-party risk, such as Bitcoin and gold.
And if you're Keynesian, Tuur, you don't want anyone saving anyway. You're an evil hoarder. You hurt the economy. You hurt the poor. So you don't want anyone having any savings. Period. You want people to go into debt. You want people to consume more than they earn, consume more than they produce. So it's just psycho Keynesian economics. This negative rates to me is basically they're running out of options on the Keynesian playbook. You talked about how they might actually want to let banks fail. They didn't seem after 2008 to want to let banks fail, because we've had decades really of where they didn't want to let that many banks fail, except for the savings and loan crisis, what the U.S. did and things like that. But they seemed after that to not want to let banks fail. But it appears that the politicians see that they're going to get voted out of office now, I guess. Maybe this is a time where there's such a large backlash to any type of bank bailout, where the politicians don't have the political capital to allow to give the banks all the secret bailouts and not let them fail.
Yeah, and also, I mean, it's a way to blame, right? It's a way to point at a certain group of people that's to blame for everything. And if they start letting banks go bankrupt, then all the people can get angry with the bankers, and then the government can kind of like be the knight on the white horse, kind of appeasing or figuring some things out, which of course is not really going to happen, but at least it might deflect some of the attention away from the politicians and maybe the central bankers. But Latin America teaches us that no, I mean, people do get it, and they're also going to get angry with with governments. There's this speech I found from earlier this year, just to emphasize again that yes, I do think we are going to have bank failures. This is a speech by Dr. Andreas Dombre. He's a member of the executive board of the Deutsche Bundesbank, the central bank of Germany. And in his speech, he asked, should we allow banks to fail? And then he says, as a matter of principle, the answer is, of course. If the threat of failure is credible, then it may encourage banks to behave prudently. And then he says, so credibility requires constant legal frameworks across countries that make it possible to master the process of resolving a bank. So that's what's happening. We have this legislation in Europe, but also in the U.S., in South Africa and Brazil. It's everywhere. They're making bail-in policy to allow for a controlled demolition, if you will, of these zombie banks.
Yeah, and in terms of where there's a lot of economic problems, in Argentina, in Venezuela, you mentioned in Cyprus, whenever these things were happening, you saw a big jump in the users of Bitcoin. I think in Spain too, right? As Spain was having a crisis last year.
Correct.
So there's all these, whenever there's a big crisis, and Venezuela is a total disaster, but I think, Argentina too, people want to be paid in Bitcoin because it's just easier. And in some of these countries, they've already put, unfortunately, a lot of penalties on owning gold and silver. There's large VAT taxes, I know, in a lot of Europe, right, on buying physical gold and silver. And I think in some countries like France, you have to register, right, or something like that.
Yeah, it's gotten worse over time in the past few years. There's restrictions on the amount of cash that you can use to buy anything in general, but of course also precious metals. And as you say, there's restrictions on how you transport it as well. There's VAT, especially on silver. So yeah, it's not encouraged at all. And the thing is with Bitcoin is that you can't contain it. It's like a dragon with 1,000 heads. There's a million ways to give people. Yeah, from the regulator's perspective, right? It's a nightmare, which is good for us because we can just make use of all these solutions that are offered by these incredibly innovative entrepreneurs that make Bitcoin more private, that allow for buying Bitcoin in various ways. It's really, in my opinion, the new offshore bank account. It's a very, very powerful tool for storing your wealth for the future and for transporting it around the world.
Now, I heard Mark Andreessen, the venture capitalist, he's invested in a lot of successful technology companies. He started investing in, I think, BitPay or Coinbase, one of the two. And he was talking about how Satoshi, for designing the blockchain and some of the other advancements in Bitcoin and digital currency, probably should win the Nobel Prize. But instead, you have the governments, the politicians, the central bankers, the Keynesians. They're trying to find out who he is. They're probably trying to throw him in prison like they did with the Eagle guy in the Liberty Reserve. Do you think he should win the Nobel Prize, or do you think he should be in prison?
Yeah, of course. Well, I think we need something new because I think the institution of the Nobel Prize, especially in economics, it doesn't have any more credibility. We have more warmongers winning the Nobel Prize for peace, and then we have these money printing lunatics for winning the Nobel Prize for economics. So I really think we need some kind of new prize. There's the blockchain prizes that are now being made by the company Blockchain. I think we'll see new types of these awards because the old ones are very hollowed out and rotten from the inside. So, but yeah, I do think that Satoshi should be lauded. Although there's other people like Adam Beck who designed the mining protocol, who have made major contributions without which Bitcoin would not be possible. This is the result of a 25-year-long quest for digital anonymous e-cash.
Now, one of the best things about Bitcoin and gold and silver they've accomplished this, at least in the United States. I don't know as much as elsewhere. But I'm seeing more mainstream people, more technology-oriented people who I would not consider libertarians now, start to ask very important questions to her that you and I as libertarians have asked, but other people in the mainstream have called us crazy for. So what is money? And about supply of money and store of value and all these important questions.
Yeah, I think Trace Mayer always makes the point quite brilliantly when he says that Bitcoin is just an extension of freedom of speech. And in the technology environment, we do see people really valuing this. They value the freedom of information, the freedom of communication. And so if money can just be an extension of that, then that means a lot. I mean, this is going to change history because money has been for the last 100 years the main source of income for governments. The inflation tax has been massive. It's been the reason why we've had these mass-scale wars that went on and on. I mean, before, wars would just stop because the money ran out, and this is going to happen again in the future. The welfare warfare state is just going to have to shrink, and it's going to have to shrink a lot. And I think that's fantastic for entrepreneurs and savers, and even poor people around the world, because now people are stuck in a welfare system that's about to run out of money, right? That's horrible.
Yeah, that's a good point. And Europe's been doing the welfare state even longer than the U.S. has. So Europe, your economy is not doing that well. You're supposedly in deflation, but yet when I talk to my friends in Germany, people I met through this podcast or online who listen to the podcast and come back to me, they tell me, Jason, we're not really in deflation. My bills for food, electricity, all the basics in life. One German friend of mine was telling me about his train costs, train transportation from one major city to another in Germany, and it was 200 euros or some ridiculous number, and I was like, that's ridiculous for one train ride. Is that what you're dealing with too with your bills in Europe as well?
Yeah, well, so a lot of the services are provided by public or semi-public organizations, and like the train, for example, I know that every citizen in Belgium pays about 500 euros a year in taxes just to keep the trains running. I mean, people say, "Oh, it's so cheap," and it's not at all. And this corporation is bleeding money every month. It's bleeding money. It's in the red massively. And what we see historically is that we just see after that, once the government runs out of money to keep bailing out these public enterprises, they're privatized, and that's the shock that people experience. Like, oh my God, now all of a sudden my taxes have not gone down because the government just has to pay interest on their debt, or there's all kinds of new expenses. But because these public companies are failing, I also, on top of that, have to pay more now for these services. So it's difficult for normal people in the street to see what's happening. But in the long run, it's a good thing that we're having these privatizations. The postal service, for example, in Belgium was privatized fairly recently, and I think a lot of them will follow. And then we'll see something like a Chile scenario in the best case, whereby free markets reign again, and entrepreneurs can compete with each other to offer the best services for customers.
It's a very good point, and hopefully we get back to more free markets, although I think in some countries like the U.S., I think that's decreasing, unfortunately. It's probably going to get worse before it gets better. As an entrepreneur here in the U.S., I kind of feel like Dagny Taggart, where I'm having to deal with, more rules, more regulations, more taxes, more fees every single year just to keep my head above the water than I have had in years past. And a lot of my colleagues feel that same way too, unless, of course, you're getting very big checks from a venture capitalist or an angel investor, and you don't really notice those things then.
Yeah, right. I mean, it's these two evolutions that are like, we have this hyper-bureaucratized empire that's failing underneath its own weight, and of course everybody who's as an entrepreneur, you're kind of against your will, you're recruited into this system. But on the other hand, we have this informal economy, and Bitcoin is part of it, that's blossoming. Now we're going to have Kickstarter for Bitcoin that's being launched fairly soon, open source projects, all kinds of things. So that's disrupting the sphere massively. And I think once we hit rock bottom, and the barrier to entry for this, let's call it a gray market, is lower because people are desperate, then when the growth comes again after that, it'll just be part of the culture. People will just assume that, yeah, it's normal to do a lot of business with cash, and Bitcoin is going to be part of that. So you can sell global services in a cash-based economy. So I'm really, really optimistic because usually after major collapses, we've seen this perpetual crisis where government keeps printing money, or they kind of adopt a standard and then they abandon it again, or like in France where the lands of the church were used to back the currency, which is ridiculous, but that caused the crisis to prolong. Well, guess what? I mean, now we don't have to wait for divine government intervention to rebuild our system, because we already have the most important part in our own hands increasingly, and that's money, right? This new private money revolution is going to cause depressions to be a lot more shallow in the future, I think.
Now, you just touched on a few of the different potential innovations that are coming thanks to Bitcoin. We're starting to see the big technology companies. We're starting to see Google announce that YouTube is going to accept Bitcoin tips. So people, if they listen to this podcast and like it, they can tip us in Bitcoin eventually. Or you're starting to see the eBay CEO admitted that he owns Bitcoin. And I'm sure some of these large companies, Apple just allowed, I think, the BitPay wallet, right, or the Coinbase wallet to come back online. And the Google CEO, Eric Schmidt, also said that cryptocurrencies are inevitable. So I think that brings a lot of indication, besides just Mark Andreessen, who's one of the best venture capitalists out there investing in Bitcoin-related businesses. Do you think these large companies, then, the large tech giants, you think they're secretly working and testing on integrating Bitcoin?
Yeah, no, there's no doubt. I mean, I was at the Coin Summit in San Francisco. I think that's about a good 2 months ago. And yeah, the vibe that I had there and the information actually that I had was that all the big tech companies, all of them, no exception, have Bitcoin task forces. And increasingly, almost all the banks are having them as well, and governments as well. So yeah, I mean, everybody knows it's coming. It's just a matter of time, and the people that are in the know are buying in with their own money, even though their institution or their fund may not be ready to jump on board. They know that it's coming, so they're going to start buying with their private money, and that's going to drive up the rally. I think that's coming up. I'm expecting higher prices in Bitcoin later this summer.
Yeah, I am too. When Bitcoin bottomed around 400, I thought it was a good time to get back in after it had, had basically a blow off top with a hyperbolic move in 2013. But when it got down to 400, I thought it was an interesting speculation from a sentiment point of view, because the mainstream media stopped talking about it.
And Mt. Gox failed, right? In February, yes. Mt. Gox failed.
Good point. Yes. Good point. And people were like, oh, that's going to be the crippling blow to Bitcoin, but they didn't even understand the technology, how decentralized it was, and how so much of the business has already moved away from Mt. Gox. Anyone in the know who knew about the Bitcoin industry knew not to trust Mt. Gox more than a year before they went bankrupt. It was well known that they didn't have their shit together, that they were not running their compliance systems well, and all these other things, that they were just very sloppy in terms of running their business, and that's why so much of the daily Bitcoin volume traffic had moved away from Mt. Gox.
Yeah, I mean, they had dropped from 80% to below 20% even before they actually collapsed. I think even the start of this year they only had 20%. So. But a lot of the newbies, a lot of the new people that got into Bitcoin, the journalists kept writing about Mt. Gox, so they became customer of that defunct company. But the Bitcoin community was actually very strong. I mean, if you think of it, nobody with substantial holdings has sold for prices substantially below $400. That really communicates a lot of faith. A lot of people are just holding, and I was talking to Wenceslas from Zappo at the last conference in Amsterdam that I was at, and he says that the bottom at 400 was not really millionaires or billionaires buying in, but it was more the case of long-term Bitcoin holders that were just sticking with their guns. And now the bigger money is coming in, so that's going to be the fuel for this rally.
I think also, besides Mt. Gox failing, I think one of the reasons Bitcoin dropped was a lot of the Wall Street trend traders, the people who don't like Bitcoin, who don't understand it, they chase the price higher just because of the chart move. and they dumped it after it had already come down. It had already started coming down, because those people, most of those guys, I know some of them from Wall Street, they don't care about fundamentals.
Sure.
So they don't care. They don't read the white papers like you or me or the articles. They're not going to read the long in-depth stuff. They just see the chart action and they think, how can I make money for this short amount of period of time, and how can I limit my downside risk? There's no put protection, right? So that's probably why they dumped it, is because they couldn't figure out a hedge trade there in order to limit their downside risk.
Yeah, and also, I mean, if you just look at Bitcoin historically, I mean, it's hard to talk about history with a 5-year-old currency, but these spikes up and down, it's also like with a junior stock. I mean, this is a junior currency, so we have the same patterns, and every 9 months thereabouts, we have a big rally, and there's a blow off top, and then there's a sell-off. That's exactly what we saw now. We had a 60% correction. We had a 5-month consolidation, more or less, which is perfectly fits in the pattern that we've seen in the past. So I don't have any. I mean, we never know, of course. Historic patterns can always be broken, but
we could also have a 2008 crash where they, allow banks to fail, like you mentioned, and then everything goes down, and then it's a buying opportunity to buy Bitcoin then maybe below 400, like similar to how Apple was at $90 a share after the 2008 crash. We may have one of those. You never know.
Yeah, but then again, then is my what I wonder, because I've been I called the top at when it was on January 10 when it was I think 950. I called the double top. But I was asking myself, how much do I want to put at risk to sell here? Because if I sell lots of Bitcoins and down the road somewhere there's a problem with the exchanges, on which side do I want to be? Do I want to be in USD or in Euro, or do I want to be in Bitcoin? And I chose only to sell just a little bit because I don't want to risk not being able to get back in. And so that's my thought process as well when we have a big crash in the markets and the bond market starts crashing, for example, and then the assets in the banks start freezing up and people cannot access their bank account anymore. Well, which side do you want to be on? Do you want to be already in Bitcoin, or you want to be on the sidelines kind of skirmishing, trying to find a way to buy it? My guess is that the black market price or is going to be very high, even though the official rates might be lower because people are running away from the exchanges, if that makes any sense.
Now, do you think do you think Bitcoin complements gold well, or do you think it's directly competing with gold? Do you think it's taking away a lot of people that would normally have bought gold and silver?
I couldn't have dreamed of a better complement for gold. I think it's fantastic. We've got this 6,000-year-old money, and we have this completely new and technologically very advanced money. And both of them have merit as a store of value. I mean, I don't think the value of gold is going to drop dramatically over the next few years because we have so many people that most of the people with any wealth, they're baby boomer generation, maybe a little bit younger, and they're not very tech savvy. So I really think that this is going to be just the same reason. It's not because the internet came that the printing press immediately disappeared, right? The newspapers and there's been a decline gradually, but it didn't disappear at all. So I think similarly for Bitcoin, I think we'll see a gradual transition, and it's a good idea to bet on both, really.
Yeah, I think they complement each other very well. In terms of store of value, Bitcoin hasn't really been around long enough to determine whether or not it's a great store of value, but I think Bitcoin is a great currency, and I think it's obviously cutting a lot of costs for e-commerce, which I think is great for consumers and people, online merchants and things like that, because it's drastically lowering the fees. I mean, the banks and the credit card processing companies would take their 2 or 3% right off the top for essentially doing very little. And here we have a great free market technology in Bitcoin and some of the other digital currencies, although Bitcoin controls that market for right now at least, that you have them drastically lowering the costs here for consumers and for the merchant processors, and sticking it to the banks, because the banks are not free market here, because the banks have basically had a protected monopoly for e-commerce and things like that to charge those higher fees, government protected, for a long time.
Yeah, right. I mean, and people think that because people always think of an industry that because it's been existing for a long time and because it's entrenched, it's never going to go away. But that's what people thought of the whaling industry. It had been existing for for decades, for hundreds of years, of course. But the industrial whaling sector was about 100 years old. It was very entrenched. It was very regulated, and people thought it was a safe bet to be active in this industry until, of course, in 1847. Petroleum was discovered, and we had all these new, we had paraffin coming up, we had other ways to light the homes, and the interest in whale oil plummeted, and that was the end of a 100-year-old industry. So I think we'll see something similar happen with Bitcoin versus the legacy banking system over time.
And that's a good point. And hopefully this legacy banking system will adapt, or it will die off, because I'm getting fed up with it. You mentioned earlier how the banks may be testing Bitcoin. I hope they don't test Bitcoin, and I hope Bitcoin sticks it to them, because I'm tired of them, bullying everyone else around and forcing people to, deal with this stuff and not be able to get a good interest rates and do the Keynesian economic solution here that's just hurting savers and making it tougher for rules and regulations and things like that, and driving our costs up through inflation and fractional reserve banking. It's just caused so many headaches that people don't even realize that has done. And hopefully Bitcoin will be disruptive to more industries than just currency and banking. I'm hoping. I've listened before we started recording. We talked about the Mark Andreessen interview in Econ Talk. You haven't had a chance to listen to it, but Mark Andreessen thinks this is going to be the blockchain technology is going to be disruptive to many industries going forward.
Yeah, it's quite amazing the areas it can disrupt. It's staggering if you think of it. There's so many areas. I don't really focus on it right now because my focus is how to make it through the depression, and when the monetary value of Bitcoin is at a climax, I want to reinvest, and then I'll reinvestigate all these alternative blockchain technologies. But to come back on what you mentioned about the banks and that you were kind of fearful that they might start meddling with Bitcoin, I'm honestly not that fearful. I think banks are just vessels, just like these whaling ships were vessels, and they'll be repurposed, right? They'll be used for different solutions. And of course, they have a huge battle, because after this crisis, once the dust settles, they will have if they survive, they'll have an enormous credibility problem. I mean, I'm never in my life going to open a Bitcoin account with JP Morgan, right? I'm just not going to do that. And a lot of other people are not going to do that either. They're rather going to trust on these new institutions that come up and that promise 100% reserve, that promise verifiable reserve audits and those kind of things. But even if these legacy banks try, still they cannot be bailed out, because central banks, however powerful they are, cannot produce Bitcoins out of thin air. So that's going to really put a restraint on the amount of damage that they can inflict.
It's an interesting point. And you brought up a topic that you wanted to discuss with our listeners. You wanted to talk about the psychology of an investor, the mindset of an investor. So what goes into your thought process then when you buy gold, and then how does that differ then from buying Bitcoin? Because you can't exactly value Bitcoin the same way you necessarily can a stock with a PE ratio or things like this.
Mm-hmm.
What got you interested in Bitcoin in the first place?
Yeah, well, I mean, the freedom aspect, of course, the product stand from it's the vast amount of markets that it can disrupt. I mean, the market for electronic payments is $2 trillion a year. course, $1 trillion a year, remittance $500 billion a year, hedge funds who obviously have a lot of cash as well, they're about $2.3 trillion, billion dollars, gold market 7,000, just the cash market, fiat cash. I mean, think of it. This paper bills, they're convenient. Yeah, we carry them around. We have to exchange them at every border. Well, that's $4,500 billion worth. And then offshore deposits, which are of course massive and now under siege, $16.7 trillion. So compare that with Bitcoin. Even with all the altcoins included, it's barely over $10 billion. So, I mean, to me, that's a no-brainer that there's massive opportunity. And yeah, sure, there's downside risk, but the upside potential is so massive that you can afford to invest just a little bit and not worry about it and still have the prospect of 100x on your money. Even with Bitcoin being 1,000, I think Bitcoin could go to 100,000 or $1 million a piece. And that's exactly what Bill Miller was thinking. This, I don't know if you're familiar, but he's a famous value investor who beat the S&P for over 15 years in a row. He started buying into Bitcoin in February when Mt. Gox collapsed and when he noticed that the community was not in despair, really. So yeah, that's what excites me about Bitcoin as an investment. About psychology, it's something that I've just been thinking about myself for the past years. Like, why is it so hard to be a good investor? Because the basics don't seem to be that hard. It's more about battling your own demons and being able to stick with your guns and doing the research on fundamentals and then just making a stand. And I think a lot of the reason why people are such bad investors is because of peer pressure, because they feel they're afraid to be independent, and they're very prone to manipulation. So for me personally, what has made me a better investor, I believe, is to work on myself, really. I've done a lot of therapy. I've done a lot of work on looking at my own friendships and family relationships. And frankly, I'm not afraid to do my own thing and go against whatever the mainstream is, because I only care about what my friends think of me and not what some manipulative person that happens to have a historical tie with me might say or think.
Yeah, and if you follow the advice of CNBC, you'd be buying stocks now, trying to buy high and sell higher when there could be a potential stock market crash coming up soon. You wouldn't have bought gold below 800, so you would have missed a huge move in gold there. And CNBC is a bunch of trend trading people. It's a herd mentality. They're greed and they play on greed and fear. They play on emotion. And as an investor too, like yourself, I agree with a lot of what you said. The best way to do that is to not check the price necessarily all the time. We had, unfortunately, a consulting client who, for gold stocks and things like this, like instead of selling gold stocks when they're higher, he just kept checking the price and he was happy, and then he didn't take enough money off the table. And when they got lower, he just blamed other people for his own problems by himself. This is not a young man in a business background and things like this. And, people are going to become slaves to their emotions, to greed and fear. And as an investor, that's the toughest thing to overcome. You have to keep that rational head. And if you're going to check your account every day and fret about things, then you probably shouldn't be investing in that thing as a long-term investment. Or maybe you should buy like some insurance, a put protection or things like this. Right. Although Bitcoin, we don't have those things yet, right? But I'm sure those things will eventually be put in place so people can hedge their Bitcoin position. Yeah,
I think what's valuable as well, for me definitely, is to work with scenarios, is to really, because, I mean, the positive scenarios, we don't really have to do a lot of work to envision those, because that's what we do all the time. Like, of course, I imagine Bitcoin already being 5,000 or already being, or silver already going over $100. That's not the hard part, but what's the challenge, I think, or what's very useful, is to think for yourself, okay, so what am I going to do if Bitcoin is $200, right? And what's my strategy? How am I gonna deal with that? and then to really try and go into that scenario and to figure out how your mental state is going to be, and that really helps you build armor against those moments. We've had them, right? The gold market. I mean, there's lots of blood in the streets now, and people are quite desperate. But if you 2 years ago, if you mentally prepared for this, then you're probably quite healthy now, because maybe you've taken some precautions, or you've hedged your bets, or you're just prepared more psychologically. You haven't lived
keep buying, or hopefully you have the cash flow to keep dollar cost averaging. But unfortunately, everyone doesn't always have the cash flow to keep dollar cost. But I think that's
right.
An important lesson for our listeners out there who are wanting to become better investors. Is first you need to figure out how to get more cash flow so you have more money to invest, because timing an investment is very difficult. Professionals don't even do that well. So giving yourself more ammo, more dry powder, more cash flow coming in, building up your income streams, that's one of the keys to investing. So you have cash. So if there is an opportunity, like, Bitcoin does drop below, it goes back down maybe briefly, maybe there is a market crash, everything crashes. And gold, silver, Bitcoin, everything goes down temporarily. You want cash for that opportunity in order to buy things that you think have good growth down the line.
Right. Yeah. What I think is interesting now, I mean, I would have done it more if there was more of an opportunity, but is to arbitrage between Bitcoin and gold, which is kind of weird because Bitcoin is so tiny. It's like little David against the Goliath of gold. But because you can, if you don't like the fiat system and you don't want to be have a bank account so much or a lot of money in the bank, you can diversify out of Bitcoin when you think the price is really very high, and then buy into gold. There's actually an exchange that was launched a little while ago called bullionbitcoin.com, and you can go back and forth between Bitcoin and gold seamlessly, and they store the gold, and there's audits for the gold, and so I think that's really interesting going forward, is to actually trade between hard monies. That's what I've been doing as well, between Bitcoin and some of the altcoins. It's a very, very great experience. I really recommend people to play around a little bit with that. And it's so easy, right? I mean, it's just a click of a button, and the fees are so low, and there's no banks involved. It's amazing.
So that's an interesting point there. And one of the things about gold and silver is it's been low since 2011. I think gold and silver have been manipulated, at least according to my research. And there's a lot of – I interviewed Nomi Prince, who spent over a year at presidential libraries, and she pulled declassified government documents from presidents, from central bankers, talking about manipulating the gold price, in the
Right.
60s, 70s, and before. I think the evidence is overwhelming. The gold price is manipulated. But it seems to me the manipulation increased a lot since 2011, because gold was about to, blow through 2000, and the people in Europe, the people in the United States, I think even China, because China decided they didn't have enough physical gold, they even decided that they wanted to help manipulate the gold price lower so they could buy more gold, because they didn't have enough.
Yeah.
So it's just very interesting here. I think gold, I agree with you. I think gold and Bitcoin and silver all complement each other nicely, because we don't know what the rule changes. That I tell our listeners this on almost every podcast, but I think the most important rule is that the politicians can change the rules anytime they want. So I think to put all of your bets in gold, or all of your bets in silver, or all of your bets in Bitcoin, I don't think it's smart to put everything just in one thing at this stage, because we don't know what the politicians are going to do going forward. Right.
Yeah, and I mean, that's been my strategy all along. Like, I never felt like I knew a lot, or I was very, whatever, incredibly clever with trading strategies and those kind of things. But like in the fable of the hedgehog and the fox, I kind of felt like I had this one big idea that I thought was very true, and that's that our monetary system is fundamentally broken, and it's going to actually break at some point. So to have a strategy that focuses on what the need in the market is going to be the moment that happens, I think that's a fairly safe strategy. So my focus has always been to invest in highly liquid assets that have low third-party risk. I think that's a fairly sound strategy to go forward.
Yeah, I agree. I think it's definitely a good strategy for people, for their savings at least, for insurance and savings purposes, to preserve purchasing power, to own physical gold, physical silver, maybe a little bit of platinum and palladium just in case. I know Kyle Bass owns some platinum too, and some other big name investors own platinum. Unfortunately, you've seen Kyle Bass, he's read white papers on Bitcoin, but he doesn't fully understand it. But he could have still bought some anyway. Maybe he's buying some now and we don't know it yet, and we'll see a video coming out that he started diversifying into Bitcoin soon. I'm expecting that, where we're going to see a very prominent investor shortly. Maybe Mark Andreessen or someone like yourself will sit down and be able to have the opportunity to talk to some of these guys, because I know Trace Meyer sat down with Peter Schiff and tried to explain to him Bitcoin like a year or two ago, like 30 minutes, one-on-one, person to person, and Peter was like, maybe I'm not smart enough to understand this technology. I think I'm just going to buy more gold and silver.
Yeah, that's fair. I mean, we need late adopters as well, so it's fair. It's going to happen. One area that I'm looking at for the moment is Argentina. I think it's about to, I don't know, somewhere in the next 12 months, we could very well see a collapse with hyperinflation. And the sale of properties, for example, I'm looking at the real estate market in Buenos Aires has been the worst. It's been the worst April in more than 10 years. Look at the sale of new cars, for example. In May, it fell 40% against last year. And the sales of high-end new cars fell with 90% against last year. And then the the volumes of real estate in March, they fell over 18% versus last year. So something's really happening there. Nobody's really talking about it.
Their currency's been destroyed for a long time, right?
Well,
they've gone through many currencies.
There was a period of recovery, and also the farmers, because of the high soy prices, they were able to bring in a lot of money, and a lot of that stuck to the hands of government, a lot of dollars, and that allowed the government to defend the value of the peso for quite a bit. And now that game is running out. The central bank is running out of dollars, and when they actually run out, then we'll have massive hyperinflation. And I think there's going to be a time frame of a couple of months in which it'll be really, really interesting to look at Argentinian assets. And to maximize on that opportunity, I think it's really worthwhile to start investigating today.
It's an interesting idea there, and hopefully, the Argentinian government ex post facto doesn't try to change the rules after, if they do collapse and you go in there and buy, they don't try to tax you as the evil, greedy foreign speculator,
right.
Try to blame you for all the problems, even though, you weren't even in the country. Try to blame you for all the problems.
Yeah, I mean, this is definitely not for beginner investors. It's definitely something that if you want to find a place to diversify in, it's pretty high risk, but potentially high reward as well.
Okay, well, in wrapping up this interview, Tuur, please tell our listeners more about where they can find your work. I know you have a website up where you have a book, an ebook for how to invest in Bitcoin, and you also have a Bitcoin podcast, right?
Yeah, but that's in Dutch. We do a weekly podcast, which is the Week of Bitcoin. So any Dutch listeners, of course, go on Facebook and look for Bitcoin Nederland, which is Bitcoin Holland. We have a flourishing Bitcoin group there. But I'm mostly active for the moment on Twitter, so people can just Google my name and you'll find my Twitter account. I post all kinds of stuff every day related to investing and primarily investing in Bitcoin. And there are some plans brewing for a newsletter. So if you go to the Twitter account and follow me there, you'll definitely be in the know when the launch happens.
Very good. And you also brought up before the interview that there is an online Bitcoin conference coming up this week, right? It actually started a couple days ago, but it's still going on, right? That people, if they want to, can attend that.
Yeah, I just don't. Maybe you have the URL. You can read the name. I just don't have it. Yeah, it's bitcoin.escapeartist.com. Now I'm seeing it.
Yep, that's it.
I think speakers are great. I think, but in general, I do have to say, people that have an inclination of maybe being professionally involved with Bitcoin or as an angel investor or something, I would recommend them to go to a physical conference still, because most of the value is not really in the speeches, because they are often published online, but it's more in the networking possibilities and talking in the corridors and learning, making connections there. That's been the value for me, at least.
Okay, great. Well, thank you very much for your time, Tuur, and maybe I'll have you back on as a Bitcoin roundtable with someone like Trace Meyer or a couple other Bitcoin experts, so we can have some back and forth. I've been trying to get Mark Andreessen. I've been tweeting him, and once in a while I get a response back. But maybe I can get all of you guys on together to sit on an online, Bitcoin roundtable here over Skype, and we can go back and forth and ask different questions and get some input that way.
Yeah, that'd be great. Let me know if that happens.
Okay, well, thanks again, and everyone should go follow Tuur on Twitter if they want to go learn more about Bitcoin, because he's definitely, I've known Tuur for a couple years, although I haven't interviewed him. This is the first time I've interviewed him. He was in on Bitcoin before almost anyone else.